What's up, everyone, and welcome back to Ready, Set, Go Real Estate Investing Podcast. My name is Brandon Elliott, and today we have an amazing guest, Mr. Brock Vandenberg. What's up, man? How are you?
Well, Brandon, thank you for having me on today.
Of course, I appreciate it. So you are more on the lending side for hard money and transactions as well, but you actually have a history in the past for doing some things on the East Coast as well as some properties over here for buy and holds, correct?
Yeah, so I specialize, Telemar Financial specializes in financing fix and flips, construction loans, and bridge loans here in California. But being involved in the real estate marketplace, I've been a part of other types of transactions. Flipped one or two homes myself. Also been involved in buying distressed mortgage debt. And then owning a portfolio of rental properties on the East Coast.
Okay, cool. Yeah, would you mind going a little bit more into detail about your business practice in general?
Mm-hmm. So as I mentioned, Telemar Financial, we're what's called a hard money lender, and we specialize in financing fix and flips, in construction loans, and then short-term bridge loans. So the majority of our business right now are what we call fix and flip loans, where the intention of our borrower is to acquire a property, to renovate it, and then list it for sale. Once that property is sold, obviously those proceeds go to pay us back our loan. We also do ground-up construction loans, and then also what we call bridge loans. And bridge loans are short-term, usually 12 months to 36 months loans in which either a borrower is refinancing a property they own, but they can't get bank financing. So they come to a hard money loan for a short-term loan, typically either to improve their credit. Maybe they need funds to improve the property, to do something in which they can then go and become more attractive to a conventional lender and repay us back. Okay. Or a bridge loan is used by somebody buying real estate, both residential and commercial, just to acquire the property. And then once they've either seasoned the property or brought it up to certain conditions, they can typically take us out, refinance us out with conventional lending.
Okay. For those who don't know out there, could you explain a little bit about like what a bridge loan is more into detail?
Yeah, so like as I mentioned, what the bridge loan really does is a short-term loan for whatever reason it is. Either the borrower has poor credit, the borrower, the property they own or going to purchase isn't something that's attractive to a conventional lender. So we'll go in, we'll provide the financing for them, and then they'll do whatever they need, again, to repair their credit, update the property, to go ahead and get longer-term conventional financing. So we meet that short-term goal or requirement for that borrower.
Okay. And what type of, can any random person just come to you with a deal and, somebody that you would work with, or have certain guidelines?
Yeah, so we work with all types of borrowers, from people that have never flipped a house before for the first flip to people that are seasoned real estate investors where they maybe do 10 deals a year. It doesn't really matter. As a hard money lender, we're looking at the asset as our collateral. And so, being that the asset is our collateral, we're not so concerned about the experience of the borrower or the borrower credit history, but rather the real estate asset themselves. If the borrower is unable to make the payment, we can typically work something out in which the borrower sells the property and then repays our loan back.
Okay, cool. So how long have you been with this company?
So I started the company back in 2007. So right as the housing market was collapsing, there was a huge demand for capital for people to buy these REOs, these real estate owned properties from the banks. And so one thing I had done is I had some financing on some rental properties that I had owned, equity lines of credit that I could draw from and lend it out. And then it really kind of took off here in San Diego, grew my business. And then I brought in outside investors and built a real estate hard money lending company that is one of the largest here in San Diego.
Yeah, nice. That's awesome. I love it. So how does that work? Like if somebody wanted to be one of your investors and actually participate with you, you and your team screens the the deals that are coming in, and then
Mm-hmm.
you have a pool full of investors that I'm sure you do screening with as well.
Yes.
When they come in to make sure they are a good fit for your company.
So we're kind of what's called a hybrid hard money lender. So every transaction we fund. So our job is to go out and originate, locate lending opportunities, underwrite them, and then ensure that they meet our specific criteria for a good loan. And then we actually directly fund that loan on behalf of the borrower. And the reason why that's important is typically borrowers come to us, especially on fix and flip loans, and need to close within 3 to 5 business days. Yeah. So we're special. We specialize in getting the loan approved and funded within that short period of time. That's what our borrower expects from us. And then on the back end, we have investors that actually invest in the loans that we originate as what we call trust deed investors. So they can actually own a portion or the full interest of that loan. And then we manage that loan on behalf of that investor through the whole life cycle of the loan. So from the borrower's perspective, they never see that. It's not really their concern. Their big concern is, hey, can Talamar Financial fund quick enough, and it can provide a loan that is best structured for what we need. Okay.
And when it comes down to structuring, I know you and I were talking about it a little bit ago. Mm-hmm. I guess competitors out there, everybody has, very similar numbers. But what is more important that you brought up and that I truly agree upon is, the relationship built. Because when you have that good, strong relationship built with whoever you're working with and doing business with, you can get those deals closed a lot quicker, and that trust level is definitely there.
Yeah. So, a lot of our borrowers are repeat borrowers. So many of our borrowers have done 10, 15, 20 loans with us, and they feel comfortable with the way we operate. They feel comfortable that if they can go out and locate a new flip opportunity, that they know they can call me up directly. They can get quick terms, and assuming that the structure works for them, that we can close within that 3 to 5 business days. You need to have a good relationship with a hard money lender to be, to be really competitive, especially here in the California market, to locate these opportunities. You have to know that your financing is in place the day that property is goes under contract. And so that's what we try to do. We try to establish that good relationship. We try to understand what the borrower needs long term. But then also, we're so well networked in the Southern California real estate market and brokers and whatnot that, if a deal doesn't work for one of my borrowers, I know it's going to work out for another borrower of mine. So I can typically marry those two together and make sure the transaction gets closed.
Okay. Now, when it comes down to a certain deal, do you have the private money that you're getting from other people? Is it just within a whole pool and everybody's getting a percentage of return on their money, or do you actually pair up the investor and are you the middleman for the transaction?
Yeah, so good question. So as I had mentioned, that all our transactions, we typically fund our funds day one. Yeah. And then we bring in typically 1 or 2 outside investors definitely a pool of investors that we have, but for the right investor to invest in that, what we call trust deed. Okay. And then we manage that trust deed on behalf of the lender. We'll call them the lender/investor through the whole life cycle of that loan. So any questions they have, if there's any issue with the loan, missed payments and whatnot, we're that point of contact, and we resolve that issue for that lender/investor.
Okay. And what kind of guarantees do you have for your investors?
So trust deed investing is a very risky investment, and it definitely is something that you should understand getting into it, especially on what we do on fix and flip loans. And so, when we do look at investors, is number one, we want to understand what's their financial condition. Can they take losses? With trust deed investing, like any mortgage, the borrower can stop making payments. We want to make sure that investor isn't living off those monthly distributions. So, can they be outstanding if the borrower stops making payments? In typical foreclosure process here in California takes about 5 to 6 months, assuming the borrower doesn't fight it. That that lender / investor, can they not receive any payments for 6 months and still lead a comfortable life? So the investor needs to really be a high net worth individual, have significant savings put aside should a trustee or various trustees go bad.
Okay, yeah, and definitely understand that whole process of, God forbid if it doesn't turn out in favor, these are some possibilities.
Yeah, and like I said, and we have that conversation. It's a very risky investment. Yeah. Anytime you're earning yields between 8 to 11% on money, expect to take some risk.
Yeah, of course. So, if you don't mind me asking, since you guys started, you said 2007.
Mm-hmm.
Okay. Since then, how many transactions have you guys been a part of?
So we've funded, I'd say, looking over the last 4 years, about $100 million in total loans. And so that equates to about little over 400 transactions that we've been a part of. So as a first trustee lien holder, that's 400 flips that we've been involved with, primarily here in Southern California. Okay. So I say San Diego, Orange County, Los Angeles, Riverside, and San Bernardino.
Okay, congratulations! That's awesome.
I appreciate it. It's really been a fun ride.
Yeah.
We've really had the opportunity to see real estate investors make a lot of money on this run, and been a part of it. And hopefully we're kind of the go-to, not just hard money lender, but person that our borrowers would go to ask questions, to help them build their businesses and give them kind of best practices getting into this business.
Of course, yeah, I love that. As far as, out of all those transactions that you guys have been a part of, has there been, I'm sure there has been a couple people that actually fell through. And yeah.
So we walk into every transaction, obviously when you walk into every transaction assuming the worst. What if when we fund this loan, what if the borrower can't fund the rent or can't complete the renovation? That typically is the biggest risk on a fix and flip loan, is making sure that the borrower is positioned to succeed, at least to get the renovations done. When we first started the business, all of the renovations were just simply carpet and paint. Yep. Put in new carpet, put in new paint, clean it up, get it on the market. In 30 days, that house was back on the market. But now it's a different industry. Now most of it's a true value add. So most of the loans that we're funding, either the borrowers are putting an addition on the property, is either doing some serious renovations to the interior of the property, modifying where walls are going. And so you want to make sure that the borrower is best positioned to be able to complete those renovations. And so, yes, some transactions needed a little more assistance and sitting down and working with the borrower who, let's say, falls short. A contractor walks out on them. They were promised the price of the renovation was going to be X, but it ended up being substantially more. And trying to figure out a solution that, number one, make sure that the renovations get done. Number two, protects my loan. And number three, gets that borrower to the finish line and get that project sold. One of the biggest mistakes that borrowers make, especially when a project goes bad, is not to call back the hard money lender. We're here to help you. We're on the same boat, typically a sinking boat. Yes. And so, work with us. Typically we have solutions in order to get that project done and on the market. So, one of the biggest mistakes and one of the issues that we have and take a lot of our time is that borrower that just stops calling us back, and we'll let that project fester.
Yeah, unfortunately, I've heard of the same situation out there. Some people, when the problems start occurring, it's easier to run away from them because they're either humiliated or don't know how to come up with the
solution to
themselves. Solution. So instead of networking and reaching out to the lender like yourself, sometimes they run, unfortunately. So what do you do in those type of situations? Like how many?
It's funny. It doesn't happen that often.
Yeah.
And when it does happen, and the borrowers come up to us early in the issues, we most likely will have a resolution for it. We'll get that project back on track.
Nice.
In the rare occasion, I think we've had 2 or 3 occasions where the borrower just simply wasn't going to be able to or care to resolve the issue. We had to step in fix the project or finish the project and get it back in the market and sold.
Yourself?
Yeah. Yes.
Okay. Okay. Yeah. I mean, with real estate, there's so many different, when plan A doesn't go right. I love real estate because there's always plan B, C, D. There's so many different options in real estate to really come up with, work your way around it. That's why I love networking with people and building those relationships, because I feel like my mind is only so much. So when you actually surround yourself with other people that have either been there and done it, or just a different mindset, it can really.
And I find there's plenty of people that want to help. I mean, maybe not financially, but I mean, they have ideas. We're sponsors of the SDCIA, San Diego Creative Investor Association meeting here in San Diego. They meet once a month in Mission Valley. And there are plenty of people that are both seasoned and novice investors. And it's a great networking opportunity for those novice real estate investors to just pick the brains of these guys that have been doing it for years, much longer than I have, on how they were successful and what kind of mistakes they made. So I suggest if you're a novice, just go down and start networking at some of these other events. I mean, we have one also up in northern San Diego, or North San Diego, called NSDREI. We're also a sponsor there at that event. And these are just two great networking events where, again, someone who's trying to get started in the market can go and interact with seasoned investors. They can sit down and listen to successful transactions that have occurred from other investors, and then learn from some of the speakers that are up there on those events.
Of course, yeah. And if you aren't here in San Diego, you're anywhere nationwide. I mean, there is a real estate investors group somewhere near you.
Absolutely.
So you really just need to look it up, get out there, network with those people, and build those relationships to.
It's a great start, and typically they're not a lot of money to get involved with, and then you associate yourself with like-minded real estate investors, and to be successful, you have to do that.
Yeah, of course. Awesome. Well, besides the hard money lending currently, what other lending, really quick, just what other lending options are there out there for new time investors?
Or like investment options that people can take. So
financing besides traditional through the bank.
Oh, you mean so there's obviously hard money lending options for people. There's hard money is what the differentiation between hard money and private money. I mean, it's pretty gray, but I always like to say hard money is more of a structured company type lending where there's a lender behind that. Private financing, I always kind of consider that as your parents or friends and family type financing, where the person maybe not as sophisticated, maybe willing to take a bit or larger chance on you, but may not have as much capital available for them to lend on your project. Those that private financing, again, can come from friends, family. You can meet people at these your local real estate investor meetings that are more than happy to work with you and provide financing. One of the, I think, misconceptions in real estate investing is it's hard to find the money. And I tell people that really isn't the case. There's plenty of capital out there for your transaction. It's finding the right deal.
That's right.
And if you have the right deal and it makes sense, you will always find money. And it's kind of a fun process. What I call dialing for dollars is when you have a deal under your belt, you're ready to go with it, and you're locating the money. Is you start talking to your friends, to your family. You go down to your local real estate networking event and just tell people about the deal you've got. And it's crazy how capital will come very quickly, and you really have an opportunity to engage other investors at different levels, because now you've got a deal and people are listening to you and they want to hear more about it. This might not be the right deal for them, but they may tell you, hey, we're looking to fund these type of transactions. So now okay, well, if I find that type of transaction, I can go to that investor and get it financed. So it's really a fun evolution of, number one, getting involved in real estate investing, and then number two, locating your first deal, and then really finding the money for that deal. It's a fun evolution.
Yeah, it's definitely just like a magnet. Once you find that deal, then the money is always there, as long as you network and you really get out there to let them know you got the right deal. And
it obviously has to be a good deal. I think if you don't have a good deal, you're not going to find any money for it.
Of course, yeah. So let's talk about some deals. The projects that you worked on in the past for your own personal investments, any in particular that you would want to share about, or we could go over the numbers?
Yeah, when I first started investing or focused on doing hard money, I would also partner with people that flipped houses as well, very early on in the process. A lot of carpet paint jobs. You buy the house, get it back on the market in 30 days. And, I don't think much of those type of transactions are there anymore. Most of that stuff was bought up at the courthouse steps when I was involved with that, or bank-owned properties. Definitely still opportunity out there, but here in Southern California, you don't see much of that. And that was fun. Now, I had to kind of take a step back from that. I wanted to focus on growing my hard money lending business, and that's what I did. But I still interact and work with a lot of those investors that I worked with early on. I've also been involved in buying non-performing notes. We bought a couple portfolios, and it just happened that they were in and around the Birmingham, Alabama market.
Okay.
And again, that was an interesting investment. We bought a portfolio of non-performing notes. They were all non-owner. I'm sorry, that the owner had vacated the premises. And so when we purchased it, we built a team that went to each one of the houses. We had about 35 houses. Assessed the damage to the house, which most of the houses there was heavy damage. And then our intent. I'm sorry?
This is all single families?
These were all single family houses, yeah. And all C locations. I mean, there were some tough neighborhoods. And so we went in individually and updated the houses, and then brought tenants in, and then sold those homes off actually into a portfolio, sold the portfolio off. But it was two years of very hard work. Number one, updating those properties, and then marrying them with the right tenants, and then stabilizing the full portfolio of houses, and then selling them off.
Okay.
It is not for the faint of heart. I will tell you that it takes a lot of time, and you'll lose some hair doing it.
Yeah. You had to build up an actual team to be able to pull this off?
Oh yeah. We had, number one, we just to locate the when we bought that portfolio, we did our best to locate each one of the properties and get into them, but you just didn't have time to do that also. So we did that. Number one, we found a kind of a college kid that went to every one of the properties, and then really just secured them. And then we got a construction team together that went to each property individually, assessed the damage, gave us budgets to renovated them, and then we worked with a couple of property management companies out there to get them leased up.
Yeah. Okay. You mind going into the back or the beginning of it to, how did you actually get this portfolio? It was a certain bank that you worked with, or how did you
this one just fell in my lap. I was networking at one of the local real estate investor meetings, and I had another investor that was doing this at a smaller scale, and said, hey, we could do this. And, and so we bought the portfolio, and, it's one of those things like when you buy a boat, the best day of buying a boat is when you buy it and the day you sell it. And it was, like I said, it was a great experience, buying and understanding the whole process of building up a portfolio of single family houses. But like I said, it was a lot of work. And, and again, it's not for the faint of heart. If you're not involved or you're not in the area to manage the renovations, much less the leasing and the tenants, being an out-of-state investor, I mean, it's hard because you've just got to find the right person that you can work with that is going to be able to do the work as you expect it to be done and on time.
Yeah.
And that was probably some of the biggest hurdles, is just finding that right person. So the contractor team, the tenant, or the leasing company to lease out the properties. We went through a lot of groups to just find the right person.
Oh, yeah.
And then the other issue being is that they were all located in C locations. So you had a lot of theft going on that we had to deal with. I can't tell you how many air conditioning units I had to replace.
Really?
But yeah. But like I said, it was a great learning experience. I mean, we made money, but yeah, it was a lot of hair loss on that. on
Yeah.
that transaction. So, what I enjoy is I enjoy the hard money lending business. It's hard work, but I leave all the construction work and all the construction management work up to my borrowers. They specialize in it, and I just focus on making sure that I have the capital available to when they need the money.
Okay. So with that portfolio, what did you end up buying it at? Like how much cents per the dollar?
Oh, if you look at unpaid balance, or let's say, unpaid balance, it was probably about 10 cents to the dollar back then.
Yeah. Okay.
I don't know how it is now, but what you fail to recognize is that the property taxes are outstanding. I mean, the property tax payments were more than the actual cost for me to buy up the notes.
Mm-hmm.
And then you've had to foreclose on the properties, which wasn't actually all that difficult. In Alabama, I think it took us 60 days from start to finish, probably
Really?
even less.
Wow.
Yeah, what you really tried to do was reach out to the borrower or to the prior owner who didn't want the property. They weren't living there anymore, and see if they would just be willing to hand the keys over. But if you couldn't find the borrower or the owner, the original owner, you would just go through the foreclosure action. Less than 60 days, you own that property. And then at that point, you could start the renovations of the property.
Yeah, that's definitely a landlord-friendly or owner-friendly type of state. So I've definitely had similar struggles, but I didn't have it on the scale that you did with so many single families. It's a lot. But my very first one, I ended up, it was about a 2-month project that got pushed back about a little over a year with 5 different contractors.
Oh, no.
Yeah, a bunch of chaos. So you definitely need somebody that you can trust and boots on ground that, they're not going to pull anything over you because you're long distance or whatever the situation is.
And that's where contracts, just written agreements are so important, is so that everybody understands kind of what we're all trying to accomplish here. If it's either a budget, a timeline, something just written down where you can go, when we first started this project, we agreed to X, Y, and Z. Here's the signed agreement. Can you fulfill your obligation or not? And if you can't, then let's just move on and we'll cut the cord. But that it's important to have those written agreements in place so you understand what was the expectation level. Yeah,
no, I agree. Cool. Now, as far as you brought it up a few times a couple minutes ago, the C class. Can you explain to anybody out there that might not totally understand the differences of A, B, C?
So obviously, when you talk about ABC property types, is A being the best, and so it's a good location. The property is in good condition. You've got the best property in that area. B is again moderate location, moderate condition, and then C and below, you're starting to get into bad areas in bad condition. We were able to bring the property, even though it was in C location, maybe up to B, A minus status.
Oh, really?
But you're just not gonna, there's nothing you can do about the location of the properties.
Yeah. So it's kind of it goes hand in hand with the property type and then the location of the area as well. You can both label it as. Yep.
And you don't want to over improve. So if you've got a C class property, you're not going to want to over improve it to an A class renovation. Yep. Take in mind what type of tenant class that you're going to have in there. What are their expectation levels for the property? Make sure that it's safe. And bring it up to obviously city standards. And so that's important because especially with C properties, it's really easy to not do the appropriate renovations, and you find yourself in this cycle of losing tenant after tenant after tenant, which actually goes into another whole point of selecting your tenants. But if you maintain and provide a nice property for somebody, they typically will stay there longer. Versus what we found is that early on we had a lot of tenant turnover. Every 6 to 9 months to year, you get a turnover, and the cost associated not only just cleaning the property back up, getting it back on the market of the lost revenue was big. So we kind of adjusted our thinking and started updating the properties a little better, making sure that we selected the right tenants. We wanted long-term tenants, and that's how we were able to better stabilize the asset.
Okay. Now, would you say there is like a D type of neighborhood or class, I guess?
Well, yeah, I mean, they're
Not like
definitely you could get a lot worse, but I don't know if I would be walking around in those neighborhoods.
yeah.
It's again, it's if you're a novice getting into the market or getting into real estate investing, and you do decide, okay, I'm going to go out of state, you know, obviously target some of the better markets. I mean, it doesn't have to be A markets, but I would stay away from the C markets. I think it's really easy to say, okay, well, you're buying a property at such a low price, and we're guaranteed income of, $600 to $700 a month. Well, the other thing we found is that the weather beat up the houses so badly that the constant update or upgrades of the property would blow out any income that we would have. And so you want to look for properties that have at least higher rents.
Yeah.
Maybe paying a little more for the property, but at least to cover the monthly maintenance of that property.
That's good. Yeah. Okay. So, let me just ask you as well. How did you come up with the name Talimar?
Talimar Financial.
Yeah. How did you come up with?
No, it's a name that no other hard money lender had. You start to see a consistent name with hard money lenders, so that we thought we would we'd go a little different route. We could get the website. So Mar being close to the beach, we're close to the beach. So hey, we went with it, and hopefully people will remember it and they will give us a call.
I think so. I like it. When all the stars align, it just makes sense.
Okay.
Okay, cool. So what other, besides building up your business right now for the lending side, what else are you working on? Anything else crazy?
I think that, again, the hard money lending is what my bread and butter is what I focus daily, try to grow my business, become a better resource to my borrowers, and, and be there when my borrowers need us to close on these transactions. The other thing that I do is I do aggregate rental properties here in the Southern California market. I own a couple properties here in San Diego and then one up in the Bay Area. And primarily just from homes that I have lived in at one point and then moved out and bought another home and just kept it as a rental. And it's, even though if you look at cap rates, the cap rates aren't, the greatest on these investments. You've looked at home value appreciation in California, and it's been pretty good.
Yeah.
So especially the Bay Area properties. So that's something that I continue to look at. Continue to take one property and move it into a bigger property, and and at some point, right now I'm just looking for more capital appreciation than I am rental income.
Okay.
But that will shift as I look to retire. I'll probably want more rental income and adjust that portfolio accordingly.
Okay. So the properties that you do have right now, are they cash flowing, or are you just you're holding on to it for the appreciation?
Yeah, a couple of them are just fully paid off,
Okay.
and they work well because I have I can draw lines of credit from them, and if I choose to want to make a loan, and that I can draw from a property and make a
Good collateral
loan using it, and so I can arbitrage the difference between what I pay on that line of credit to what my borrower is paying. I don't do that very often anymore, though, just because I have enough investor capital.
Yeah.
But it's just, like I said, it's part of it. If I look at my overall scope of my portfolio of what I'm invested in, I want to be in portion of that invested in real estate, and I just feel like this is a great investment. The issue we're having here in Southern California again is that they're just not building enough housing for the number of people that are moving into the city, into this marketplace. And so you just have this huge demand, this lack of supply. And so from an equity or increase viewpoint, I just think long term you're not going to go wrong.
Yeah, of course. What do you have plans for those eventually, like 1031 it?
Yeah. So the idea is we'll start 1031ing. We've done a couple, but 1031 exchanges into multifamily. Right now, we have a single family. We have two single family houses here in San Diego, and a property up in the Bay Area, and we'll 1031 exchange those into larger properties.
Cool. That's awesome.
Yeah.
So, I mean, is there, besides some of the learning curves that you had with the Alabama area, what other learning curves could you help educate any new person on here that is interested in getting into real estate?
Well, I mean, there's a couple ways I tell new people, to investors, there's a couple ways you can get involved. I think long term, the way to become generally successful is a buy and hold strategy. I would say that most people in Southern California would say that's nearly impossible, just because the income, the property values are so high here, and the income to property value isn't that great. If you want to, if you're looking at just cash flow, you'd have to go to outside markets. A lot of people go to Nevada, Arizona, Texas, Florida, and then some of the states in the Midwest. I think you're involved in some obviously in transactions in Ohio. But if you're looking for capital appreciation, I think San Diego or Southern California is a great market to do that. The other option here too in California is value adds. I mean, obviously fix and flips, but not really just truly I buy a house, I rehab it, and I sell it, which definitely is a very profitable business, but it's very hard. And if you're going to be successful at doing that, it's a full-time job. If you've got, if you're doing 3 or 4 fix and flips simultaneously, you're on the job site every single day at every one of those projects, and it's hard to hold down a secondary job, which for many people, maybe that's what they're looking to do, is get into it full board. But the other option, and we've done this a little, is buying a property but repositioning it. Maybe it's zoned Z. It's a single family lot. It can be split, and then I can sell out the individual lots. We've been involved in that type of transaction, or buying a duplex that is placed on a upzoned property where I can put 2 of 4 additional units onto it, and getting those plans approved, and then selling it off to somebody who wants to build it. I think those are really the opportunities right now, if you're looking at urban infill markets, to look at to look at those opportunities. They take a little longer, but there's a real upside in being able to add additional units to an existing property. There's a lot of value there.
Of course. Yeah, especially out here. There's a lot.
And then, when, like I said, newbies, someone who's new in the industry, go and network. You never know who you're going to meet. It blows me away how many new people I meet at these real estate events, all the way from people that are new into the industry, and I can act as answer questions they have, to people that have been, around for 50 plus years buying and selling real estate that you've never heard of, that, you never know what kind of opportunity they may provide you, or what kind of opportunity you can provide them. But you'll never know by never going to these real estate events. Yeah.
I think that's a great tip, really getting out there, going to these events. I've heard of other people out of state that complain that there's not a real estate group in their area. And my advice to that is just, create your own. Like, put it on Meetup that you're getting a bunch of people together to talk about real estate. And I actually have a friend of mine that did that up north in the Bay Area. And he just wanted to get some like-minded individuals around him to talk real estate. And it's turned into, just over a year, having over 400 members. And
that's a great story.
Yeah, it's huge. And so it's super powerful. And, a bunch of just connections, partnerships throughout that, which is awesome.
Yeah, and that's a great idea, because some of these cities, there may not be a strong real estate investment group. And Meetup, it's super easy to just post that right up there. It gets shot out to all the people that have an interest in real estate. And again, you never know who you're going to meet. You can have it at a coffee shop, or at a hotel, whatnot. And it's a great opportunity to meet people.
Yeah, it's definitely, it comes down to the philosophy of, your network is your net worth. The more connections, the more people that you're surrounded yourself with,
That's true.
It will show it. So cool. A personal question of mine, do you know anybody crazy enough that would do owner financing?
Actually, it's something that I don't think it is as prevalent out here in California, but in the Midwest, it absolutely is. I mean, you gotta find a reason why that person is doing owner financing. Number one, maybe they own a property that's kind of difficult to sell. Maybe they're selling it a little over market value, but they're willing, they recognize that, you recognize that, but they're willing to carry a second or a third on it to cover that. Maybe they have some tax requirements that they don't want to, that they have to get over, and they want to do, carry do a seller carry. I've probably seen here in California, been involved about 3 or 4 seller carries where they did a seller carry subordinate to our first on a flip.
Yeah.
In those cases that's where the investor said, okay, you own this real estate asset, you want to sell it, but we can come in and partner with you and make it nicer. And so you can get actually more profit from it.
Yeah. Extra.
And, and then we'll share the profits on the back end, however they structured it. Yeah. And that's where it's actually worked here in Southern California.
Okay.
But, in the Midwest, actually, I think it's not that it's totally common, but I've heard more of it.
It is, yeah. I'm looking to get myself out here.
So you're willing to do seller carry?
Yeah. Yeah.
Well, post those properties.
I know. Yeah, for sure. Cool. So when you're not working and building up your business and real estate and networking and adding value like this, what do you like doing?
Well, I'm busy right now. I just had a newborn.
Did you?
She's 3 months old. So yeah, we're excited that we have 2 other children. So popped it up to 3.
Yeah.
When I'm not playing with my kids, I'm out playing a lot of tennis. I do a lot of mountain biking.
Okay.
And it being so close to the beach, we're down at the beach all the time. Yes. So, but yeah, but I'm kept busy with the hard money lending business, and I enjoy it. It's so much fun to see people people become successful, starting with their first flip all the way up to 20 or 30 flips, and sharing the stories of remember our first flip together. Yeah. There's a couple of guys here that I've been, like I said, been lending to for probably 8-9 years now. And now they're starting to post their very first flips. And I remember going into those homes and financing them. And it's fun to watch that.
Yeah. Yeah, I love that. That's super awesome, man. Cool. So how can we add, give back value to you?
Yeah, I honestly, I just want to be a sounding board. I want to hear what new investors are looking for, and see what I can do to provide that from a financing standpoint. Value. I'm just enjoying networking. Please come if you're watching this and you're in the SoCal marketplace. Please come to those real estate investor meetings. Yeah. We are proud sponsors at them, so please come and talk to me. Yeah. If you are not, go to your local real estate investor conference, and if you need to, set one up yourselves. Trust me, it's real estate is obviously a financial. People are looking at it from a financial standpoint, but it's also a lifestyle. And I can't tell you how much fun it is being involved in real estate. It's hard. I mean, trust me, you're gonna visit some of the lowest lows you've ever had getting involved in real estate, not thinking you can go any further. But I don't know, something always happens where, it's just a little something happened to get you to the next level, and it keeps you going. It keeps you going. So I mean, we've all gone through it, but it is a lifestyle. It is a lot of fun, and obviously you can make a lot of money if you're smart about what you're getting invested in. And also look at it as a long-term play. There's no get-rich-quick scheme in real estate. There just really isn't. No one can tell you that that's the case. It takes time, and we're talking years and years to master the skill and understand what you're comfortable in real estate, what you're comfortable investing in, what you want to invest in, and then just doing it repetition over and over and over again. And I hear so many people about creating systems. I mean, it's important. Create efficiencies in what you do. Create that system. Mm-hmm. And so that's important.
Yeah, it's so true. And I'm glad that you mentioned that. Cool, man. Well, I appreciate you more than for, taking out the time to actually do this. It means a lot.
Well, thank you for calling me up and having me on the show. I wish you the best of luck, and I'll see you at some of the local real estate events, okay?
That's right. So how can anybody reach out to you and get a hold of you?
So check us out on our website, talimarfinancial.com. That's T as in Tom, A-L-I, M as in Mary, A-R, financial.com. Please check out the website. We're actually going to be rolling out a new website here in the next couple of months. Or feel free to give me a call if you have any questions about investing in real estate, have any financing needs. Call me at 858-613-0111, and I'm at extension 1. Or you can email me. It's at B Vandenberg, so B as in boy, Vandenberg, and that's B-E-R-G, at talimarfinancial.com.
Cool. Awesome. Well, that is great. I appreciate you so much. I really do. It means the world to me. So very thankful for all the education and the time you just gave up. So
thank you.
Thank you guys all so much for joining. If you could please like this, share this, leave a review, get it out to other people that you know that are interested in real estate investing. It means the world to me. Yeah, you can reach me. My name is Brandon Elliott once again. You can reach me at BrandonElliottInvestments.com or my email at BrandonElliottInvestments@gmail.com. Till next time, guys. It's been another great interview with Mr. Brock. Appreciate you, brother.
Thank you.
All right, till next time, guys. God bless.
This has been another episode of Ready, Set, Go Real Estate Investing Podcast, brought to you by Brandon Elliott. For more information, please visit BrandonElliottInvestments.com. Also, please don't forget to like, share, and leave a comment below. Thanks again for joining. Until next time, God bless.